Swim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
It is Tuesday, November 26th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. It is Tuesday, everybody. You know what that means. I bought the best big brain that I could find out there. I'm talking, of course, of the one, the only, the local resident genius, boy wonder, Chris Vecchio. Chris, how you doing, my friend?
I'm doing well. I've filled my weekly McDonald's quota. I still long stocks. So yeah, that's a 2 for 2. It's a good day for Chris.
Okay. So I just want to understand, when you eat healthy and you come on here, let's say you ate some broccoli, you started the morning with some hard-boiled eggs, something like that. Do you feel like your brain power is at 100? And then how do you compare that to a McDonald's for lunch, Christopher Vecchio? Is it the same?
I'm always operating at 100, Victor.
I'm not. I can totally. How old are you again? Do you mind me asking?
29. No, I'm 35.
Right in a way, I laughed, and then I realized, like, oh, maybe I shouldn't laugh because how old is he? I'm 38. So I totally can tell. Not only can I tell in my body, my performance of my body, I can tell in my brain. If I put bad stuff in, it used to take a couple of days. I can tell it instantly. Man.
I benchmark to a very low baseline, so it's like, this is McDonald's brain is my regular brain. That's all right. That's normal me.
That was a pretty clever little twist there. All right, let me ask you this question. Let's get you in trouble. Are you in Chicago, you have to own what's called what is it? FOID card in order to own a gun. I own such card in Chicago anyway. Do you guys have to own like some sort of card or license in order to own a gun in New York, or just to carry one?
Yeah, you have to have. And you have to have a license. And in like the city, for example, there were certain restrictions on what guns you're actually allowed to have on your persons. If you're a former cop or not, or former, LEO or military, that there are specific little, hooks that allow you to have one on your person. But New York's a unique state.
You were just showing me a couple of the cards out of your wallet. Do you own said card, the license to own a firearm in New York?
I personally do not have a gun.
I didn't ask that though.
No, I don't have a license. And in part because outside of hunting in my area, right? Like for example, in New York State, there's a law under environmental conservation law that allows you to shoot fur-bearing animals. So if a coyote comes onto my property, I would theoretically be allowed to shoot it. However, in my particular town, there is an
you live in the city.
But but there's also an ordinance now in my town that you're not allowed to discharge a weapon. So unless I fire a trebuchet at the coyote, I really can't use a gun to dispose of the problem. You have to. Right. And the DEC, I don't say what the DEC's told me to do or not do and not tell what authorities, but, they're more like, if you have a problem, just take care of it. And we understand. But
speaking of cards in my wallet, when I was in Chicago one day, I was driving around and I was listening to some hip hop. I think it was like 2000s hip hop, and I'm like going hard, you know what I mean? Like rapping in my car. And the subject matter was so far away from like the experience I live in a day-to-day life. And I caught myself and I'm like, I thought to myself, Victor, you're one punch away from a free Subway sandwich in the card in your wallet. You've got a dentist appointment next Wednesday. You need to turn this off and start listening to smooth jazz or something. This is not for you. Whoever this is for, it's not for you.
Victor, you know how often I ride around town listening to the 36 Mafia with a Big Mac in my right hand?
I think the scene in the Office Space, where that guy's driving his car, it's like, I got my pistol point cock, and then he looks and somebody drives near, he rolls up his window, so he turns the music down, then they leave, he turns it back up. That's kind of what I envision you with your cheeseburger 36 Mafia. Somehow that's the cold open, everybody. Welcome to the Price of Truth. Shout out to everybody watching on tastylive.com, as well as those watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, these crazy people somewhere in the middle of your screen, both the screen name as well as the comments will run live and unedited, because that's how we do it. But come on, like, don't be that guy who comes in and ruins the party for everybody. So go ahead, subscribe to the channel over on YouTube, the soon-to-be reformed Google YouTube. Type in Tasty Live, subscribe to the channel, and jump in and just start squawking, because the more participatory you are in the chat, the more Google will put this video in front of other people, and the bigger our community will grow, and such. We'll save the world one view at a time. Christopher Vecchio, let's start it off, my friend. I could talk about risk today, but it was kind of I don't know about how you felt. I thought it was kind of a boring day in the market. The NASDAQ was up 0.5%, the Dow Jones up 0.25%, the S&P up 0.5%, the Russell was down 0.75%. This, I guess if I had to pull out or tweeze out a little narrative in price today, which is always a little dangerous to go skating on that narrative fallacy thin ice, but if I had to tweeze one out, it would be yesterday you had Russell outperforming I think the NASDAQ by 200 basis points, which is crazy. You don't see that move very often. You get, after the futures open, you get Trump's tariff tweet, Trump's tariff threat, and the market effectively started to reverse that out, tweeze it out a little bit, take a little bit of that strength away from the Russell, add it back into other areas related, causation, not necessarily, or correlation, not necessarily causation. Your thoughts on risk today, and how much you think it was related to the Trump tariff threat yesterday?
I will say there is a market difference in how the market reacted today compared to what it did initially in May 2019, when Trump was rattling around those tariffs against China. Now, we heard about the tariff threats well before they were officially enacted. But the fact of the matter is that we're hearing tariff threats now while Trump is not actually president. And I think that's a really important distinguishing fact as I settle back and look on today's action, because it means that Trump and the incoming administration are giving these other countries, Canada and Mexico, time to resolve this without the tariffs actually being implemented.
Correct.
It's a fascinating, actually, a bit of, chess here, if you will, where if you think about if you were to implement them on day one or threaten to implement them on day one, they could say, we need meetings, we need this, we need it. He's saying, I'm going to implement these on day one. There is something on the calendar preventing me from doing it now. If I could do it now, I would do it now myself, but I can't. So you guys have 2 months to figure out this problem before they come into effect. If Trump waited to make this announcement until he was actually in office, I would take the tariff threat a lot more seriously and literally than I do right now. The fact that he's announcing it now is trying to give the all clear to let's just get this done so I don't need to put them into place whatsoever. And he wants to demonstrate, in my opinion, with this threat, that these are negotiating tools, and he can get kind of proof in the pudding right away that by using the tariffs as a potential threat, he'll be able to bring people to the table. So when you look at the stock market today, I look at the S&P and the NASDAQ because that's where most of my long equity exposure is. I see a market that's just continuing to move up in low volatility. What's fascinating about this reaction today, Victor, is that in 2019, when we had those tariffs officially announced, the S&P was down about 2% and the VIX popped to over 21. The VIX today fell flat on its face and the S&P closed up at a new all-time high. So there may be a reframing here in the market's perspective about what tariffs actually mean to Trump. He's definitely serious about doing them, but what do they literally mean? They literally may just be a negotiating ploy in the short term, which means the equity market rally relatively not impacted in a significant manner.
Yep. We had this talk like a week or 2 weeks ago, and that the line, take him serious but not literal, and then I shared with you that that academic work.
You're relearning Trump speak.
Yeah, it was basically how the market overreacted early in the Trump presidency and then became much more dull to these pronouncements once they realized his negotiating style. And to your point, if you take a step back from the media hysteria on this stuff, which is going to be a mainstay for the next 4 years, that's going to be what's going to happen. He's going to say something, and everyone's going to act like their hair is on fire. And as a trader, emotion can, that's what we're trying to avoid here. We're trying to avoid fear and greed. So you take a step back, and that's the exact right point of view, Chris. Why is he saying this with 2 months to go? And why is he saying this with Canada and Mexico? And did he do this before? Because the truth is, one of the ways he got the Remain in Mexico to agree to the Remain in Mexico policy, which was those that were applying for asylum stay in Mexico before crossing the border, and only when their asylum is approved. And if a large percentage of asylum cases are not generally approved, then what happens is your border crossing to go significantly down. One of the reasons he was able to do that was through tough negotiations like this the first time around. And so to me, I go, is this a possible pathway where where Trump ends up placing 25% tariffs on Canada and Mexico? It's possible, but what happened instantly within the 24 hours? The Mexican president says, I'm going to respond to you with a letter. Within a few hours, Justin Trudeau calls President Trump and calls what he has a meaningful discussion. He says there's lots of work to be done. We know how to do this. And so, you didn't get sort of adversarial positioning on the other end. You got what looked like some cooperation from the Mexican leadership as well as the Canadian leadership, which means what reason would you have to believe that of this binary path, 25% tariffs on our northern and southern borders, or something less, or not at all, because one or both partners are going to help with this conditional tariff, is what it seemed like, with either fentanyl, stopping fentanyl from coming into the country, or helping to stop illegal immigration. And I think that's the way the markets read it. That's the way Bill Ackman sort of positioned it yesterday, which I tended to agree with. But the only thing, and I'm curious to get your point on this, the tariff threat, it is a negotiation point, but we shouldn't forget it is also a live threat. Because if anyone doesn't make good on his negotiation, he can't just not do it. He's going to have to at some point show his cards. And if he's put himself into the corner where if he doesn't get what he wants on the negotiating table, he's going to have to implement some of these things.
Yeah, there's that's why you really have to put some teeth behind this if you really want to do it, right? For the sake of this conversation, assume I'm decoupling a little bit. I don't think that tariffs, broadly speaking, I am a believer in free trade broadly, but we also need to take a step back from the theory and say what has been the actual result of us joining NAFTA and bringing China into the WTO, right? How come we had 17 million jobs in manufacturing in this country prior to NAFTA, and now we have 12 million manufacturing jobs in this country? Where did they go, right? What happened? One of the things that bothers me so much is when we say like China stole our jobs. No, they didn't. We happily signed them over.
He did it willingly.
Corporations,
Bill Clinton did this willingly.
Clinton, Victor, you know where I sit at the table, so let me say this, like Clinton and those Epstein people, like we don't need them. We don't need them. Okay. Bill Clinton, see you later. Like that style of policy is out the window because it's hollowed out the middle class. One of the best representations of this, it's called the elephant graph. When you look at the distribution of global income and how it's changed over the past 40 years. And you see that the world's wealthiest people, typically those upper middle class or higher in Western nations, have done very well over the past 30 or 40 years. And in the global 50 percentile, those people have done very, very well because those are the people that live in countries where manufacturing bases have shifted in Southeast Asia, for example. But then why is it called the elephant graph? And I don't know if you're sharing this on the screen, or if you could possibly even pull it up to give the visual of what I'm looking at this. But when you think about that elephant graph, you see that there's like the trunk. And who are the workers in that trunk area? Those are the American manufacturing class. Like those are the people who are the folks making the average American income on any given day. And their jobs are the ones that have been lost. So while I don't like tariffs personally because I believe in free trade and what it does for the broad economy and how the standard of living has risen in America, there also are clear externalities that have not been taken as seriously as many people should have. So working through those externalities, if you have an unfair trade system in place, using tariffs could actually bring a bit more balance to it, right? If we want to think about this in a strategic perspective. And I think the fact that our opening salvo, once the Treasury Secretary is in place, someone with a reputation of wanting to do tariffs in a more measured manner, not just fire off and, like Danny DeVito. So anyway, I just started shooting off tariffs, right? We're not going to do blanket 20%. We're actually going to do this thoughtfully. I think that the announcement coming in context of the Treasury Secretary announcement, the Commerce Secretary announcement, and it being done 2 months before the inauguration tells us that we're trying to substantiate the tariffs as a negotiating tool. Now, when push comes to shove, he's going to have to do something if Canada or Mexico doesn't oblige. I can't imagine Canada or Mexico going to do really much of anything significant besides, for lack of a better phrase, complain. 80% of Canada's exports come to us. We are Mexico's largest export market. Their economies will absolutely tank if they don't send us their business. There's not enough time in the short term to fill the gap in terms of those customers. And it would mean immediate recession, if not worse, for both of those economies. So that's why Trudeau and that's why Sheinbaum both came calling to Donald Trump last night. And I think we need to take that into consideration. The market is not going to have a problem with that. And Victor, what did the S&P do? I've been talking about this all day long. What did the S&P do during Trump's first term? 60% up. Where are we now in Biden's term? 60% up. The market, if it prices in the tariffs, which I think it has, which is why you have a muted bond market reaction today, if it's priced in the tariffs, then longer term, 3 months, 6 months, 9 months from now, outside of the intraday headline-driven noise, this doesn't derail the best laid plans of mice and men for S&P hitting 6,300, 6,500, 7K at some point in 2025.
Yeah, I saw a bunch of those calls out today and yesterday evening. The 6,000, somebody even, was it Bank of America, 6,666? It's like, why would you do that?
Demonic with a extra wink.
Extra kicker. Well, what would you do that for? But then
an extra demon for you, Victor Jones.
An extra 7,000 calls, a lot of that stuff coming out, which makes sense. It's about that time. You're getting to year end, so it's starting to be time to pull out those crystal balls and make a 12-month prediction in a highly unpredictable market with a new administration. But that shouldn't surprise people. I also saw, I think, a Bitcoin 125,000 by end of year with a 250,000, getting to 250,000 by next year. So you're going to see all this stuff in your news feed. You shouldn't be surprised, nor should you let it trigger any emotional response. This is what people do at the end of the year, and you can't not put something out. Many of these banks, you can't not put something out because you're fighting for mind share. You're fighting to be part of thought leadership within the space. And you pick a number. 6666 sounds like there's some sort of math behind it, but at the end of the day, that's people are going to remember that. They're going to talk about it. And that's what's going to get, part of the conversation. Unfortunately, that's what drives the incentives behind this. Did you read Ray Dalio's long ass blog yesterday? If not, it's fine. I'm going to read you a little extra. I'm just curious.
No, I don't pay attention to people who underperform the market for a decade straight. I sincerely don't care.
Let me read you a part of his blog. The early part I don't know. I want to be really careful and respectful. The early part, his setup, it was a very, very long read. The early part I didn't much care for. Thought it was a bit superficial. And I didn't really agree with a lot of this, the way he positioned things from a political standpoint. But that aside, he's very consistent in the way he views the world right now, that we're coming towards external conflict. We also have this internal conflict. He believes that This is we're likely headed to a place of changing world order, which is normally capped by a hot conflict, hot war. So I'm going to read you out a little expert and just get your reaction before we talk about VIX and bonds and asset prices moving on your screen, and talk about what you're doing with your money, what I'm doing with mine. More government influence. So basically, he's predicting what we'll see in the future. More government influence to achieve the government's objectives, even if that comes at the expense of our free market profit-seeking system, with debates between the conservatives who favor this top-down direction and those who favor the free market more. Along these lines, we should expect more government influence on private markets to achieve the government's objectives. This is needed to achieve the grand plan to reshape the economy and prepare for war. He's talking about war with China. So we should keep in mind that cost efficiency and national security achieved by the government working with national champion companies is the primary objective, not profit making alone, because profit making won't achieve these goals. He's effectively saying that there's an incentive that is stronger than profit guiding an incremental dollar of investment right now from his point of view, and that incentive is the war game out with China. And you could maybe look at like the investment in Intel as sort of this example, right? That we have a need to decouple our supply chains and to be prepared if this sort of Cold War or this sort of economic competition spills out into anything further. I'm just curious to get your reaction on that. Do you kind of see this as just a long-term positioning of America and China inching its way towards some sort of hot conflict in the future? Is that your worldview right now, Chris?
Unfortunately, my worldview for a number of years, having gone through every young man goes through a period of his life where he obsesses over, historical figures, from Alexander the Great to Caesar to even people like Vladimir Putin, because Vladimir Putin is a remarkable historical figure. He's obviously, I personally think he's a monster. Not gonna leave that up very vague, just so we're clear on that. But very interesting person and his life story, from being a KGB colonel to working his way up through the system and the collapse of the USSR, his work with Boris Yeltsin, and weaseling is the word choice I use, his way into the position of becoming the next president. George Bush looks into his eyes and sees that his soul is good. He's acquiring power and holding on to it requires a lot of skill. Okay. Ray Dalio is effectively preaching stakeholder capitalism here. Mm-hmm. And what he's suggesting is that we need to preach stakeholder capitalism because there is a great war that's about to come. And we need to forget what America can do for your profits, but what can your profits and margins do for America? I don't think any company will operate that way. I don't think any company is going to be able to sell its shareholders or the stock market that, hey, by the way, we're friendshoring because we're getting ready for World War III. So do I think that we're there? I think there is a very credible argument to be made with North Korean troops on the ground in Ukraine right now that we are as close to a major global conflict as we've ever been. I have been a long believer that Vladimir Putin is someone who wants to reunify Eastern Europe. So I'm not surprised or shocked at what he's doing in Ukraine. You and I have been doing these videos for a very long time. And I was one of the few voices out there on Jones and Friends saying that he was going to invade Ukraine. Why else do you put blood hospitals up on the front lines in December 2021? I don't see this stopping. If Ray Dalio is correct, and this is some fourth turning of sorts, then we have much bigger problems to worry about whether or not S&P is going to hit 6,300. Okay. In that world, we're trading in bottle caps, not in US dollars. So I don't think that we should pay much attention to any worldview that's predicated on absolute misery and destruction. I will be an optimist. I will fade it, even though I may largely agree that we are heading towards great strife and a potential significant turning of the ages. And it's because of people like Donald Trump and Vladimir Putin and Xi Jinping, people who have acquired significant political power and are going to exercise it for the means that they see that fits them best. And that's just where we stand as the world right now. So instead of saying, well, the tariffs are going to do this to the market. Well, just trade the screen in front of you. That's our job as traders. Speaking from the trader perspective, trade what's in front of you, not what you fear.
I'm just curious. We didn't talk about this, but I'm curious. Do you have like a tariff trade in mind, or some set of trade conflict instruments? I don't yet. My old one was acquired. I worked through this live on air. It's a horrible part of the show yesterday. But Kansas City Southern was a railroad
I thought you were long Sava or something.
It would take it would take unfinished goods down to Mexico, and for assembly. Then it would take finished goods, washing machines, that type of stuff. It would take it back up into America, into the U.S. Midwest, to be sold. And it was one of the greatest trades, the back and forth trade during this trade war. I want to say trade war, with the renegotiation of NAFTA, the back and forth between Trump and Mexico. The first time around, it was acquired by Canadian Pacific. So I don't think it's tradable on the U.S. markets anymore. So my go-to is gone. I'm just curious. I'm asking the audience as well, if you guys in the chat have any specific like trade war or tariff trades, please throw it in the chat. Do you have any offhand, or is that something you're still working through?
I am working through it. I am looking for small cap stocks that would be particularly impacted by the supply chain issues with Mexico. I think the fact that we both heard from Mexico and Canada in the past 24 hours, and Canada's position was like, hey, we're the Great White North. What are you going to do to us? Like, let's work together here. Whereas Mexico's was a little bit more indignant. I think that the primary risk from the Canadian tariffs is what happens to the flow of energy from Canada. Because you have roughly 3 million barrels of oil per day that are coming into the United States from Canada that largely goes to the Midwest. Because it's not the eastern coast, it doesn't impact the plurality of the population. But when you think about, like, if you draw a straight line through the middle of Texas up to the northern part of the country and west, that's like 30% of the population or so. Given that a good chunk of this oil also flows into the Midwestern states, like your Illinois, like your Iowa, let's call it half the population could be potentially impacted by tariffs on imports from Canada, because that would apply to oil as well, right off the bat. Now, do I think that like people like Scott Bessent are going to come in and say, maybe we should carve out, like with the sanctions we did for Russia, maybe we should carve out an energy component to this so that we don't totally hurt ourselves, cut off the nose to spite the face situation as we try to implement this? I think so. But I'm working through a list of what would companies that are specifically regional, small cap, who have supply chain disruptions put into place as a result of these tariffs, how would that be modeled out? Now, on a day like today, you could see like the Russell was down much more than the S&P or the NASDAQ or the Dow Jones even. And so clearly there is some concern that supply chain disruptions could imperil those companies that don't have the robust balance sheets like your Mag 7 do. In a tariff world, Mag 7 names do better than small cap stocks. But if you're not in the tariff world, if you're in like the threatening tariff world and you're getting all the stimulus still going on and the Federal Reserve is still in their corner doing their own thing, then small caps, thanks to the deregulation efforts, they can actually get going again. But this is like, I think about, someone sent Tom an email today saying, I'd love to do a segment with Tom and Tony and Chris about what, Chris's probabilistic outcomes. If I were to like put this all on a scale, say this is my most likely outcome at 68% and the second most outcome at 20% and blah, 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 I think the path dependency here is wide open still. The chances of getting full tariffs are just as likely as this just being a threat. And so how do you price that in the short term? You can either jack up the volatility a whole bunch saying that, this can go anywhere, or you could say that nothing really matters right now because it's all too crazy. So what are you going to take too seriously? And I think that was the market's reaction today. Like VIX dropped below 14 at a point. S&P closed up at an all-time high. How real are these threats moving forward? But if they are real, then regional small cap type of companies that could get really hurt from seeing their energy prices spike or supply chain issues interrupted. That's one. Two, what could also be hurt? I mean, I think that home builders are in a really fascinating spot right now. Goldman Sachs just put out a report articulating the number of people, both documented and undocumented working in various industries. And to no one's surprise, construction is towards the top of the list. Mm-hmm. And if we're slapping these tariffs on Canadian goods, including things like lumber, and we're deporting a whole bunch of people, let's say we deported half the people that are here illegally in the country, and Trump gets largely what he wants from his campaign promise. Whether you agree with it or not, let's just envision that scenario. Do we think that reducing the amount of workers in the construction industry while slapping tariffs on Canadian lumber is going to help with the house price crisis in this country? Probably not. So where does that leave home builders? Well, home builders are probably going to start building bigger homes, right, at the square footage that they can get a break even to, which worsens the crisis, which means companies, people who own existing real estate are actually pretty well positioned because you can't afford to build anything new. So real estate investment trusts actually probably get more upside in that kind of world. So home builders have been my point of fixation in recent months. But if we're going into a world of significant tariffs and we think about how that impacts the structure of the labor markets in our economy, and it impacts the structure of commodity flow into our economy, then new home building, new units being constructed could actually fall off, and then it turns towards renovation, right? The Home Depots of the world outperform the Lenores of the world, if you will.
Really interesting stuff there. I guess so a couple of reactions. I would price so I think starting the negotiation. So he's always like, I used to work for this firm, or they were a major investor in a thing we were doing, and so I had to go through sort of like their training. And these guys they were good at everything. They were sharks, and one of the things I had to go through is their negotiation class to negotiate contracts. And I mean, most people know this, but I only say that for context of the story here. They essentially said, assume everything is 20% inflated, that there's at least 20% negotiating room in everything. And I think there's a group in the world who sort of thinks that way about all price as a negotiation, and that the other person has padded in more than what they need to reasonably be happy with the result of a sale. And then there's people that just pay the sticker. Where am I going with this? I'm going back to, if he's starting the negotiation on Canada and Mexico at 25%, it's a tough tariff, but it's not a huge number. And he's a guy that starts with a big number that he's not going to come anywhere close to in order to negotiate down. So in my thing, I look at that number and I go 25% bad, not a big scary number. And at worst, it's, you look half of that to a quarter of it is maybe where you land, if anything at all. So I think of, like, in the path dependency, I would go, what is the likelihood we get a 20% across the board tariff? I would say it's very unlikely. I think it's a starting point for bilateral negotiations, country by country. I don't know why he wants to do it that way instead of more broad negotiations, but that's the way he wants to go. And I would say the likelihood of an across-the-board tariff is slim to none. I'd put it at like 16%. I'd put the likelihood of aggressive tariffs on China at 90%, that he's going to go through with that, and we're going to get ourselves in a tit for tat. And I would say allies is probably 50-50, that we have some tariff that is lower, meaningfully lower than the number he starts with, 50% or more lower than what he starts with. And then to your point about home building, you think the likely sort of next step. Actually, sorry, I'm going all over because you had so much good stuff there. Let's start with the deportations. Then I think the deportations he doesn't come anywhere close to the 15, 20 million mass deportation. I think he'll do the 500,000 to 1 million in that ballpark of those that have already been rejected asylum, or that have committed crimes here, or have criminal backgrounds. I think that's what he does, and then it's over. He gets his political win, and everyone moves on. But the media's hair is going to be on fire during that period of time, but that's likely what happens, and then he moves on. And then I'm curious about your point about home building. Why do you think the size of the home that will be built goes up? Why would it not go down significantly lower, that we're building much smaller homes in order to meet the affordability as prices either stay the same or potentially go up in the future? Wouldn't the size of homes get cut meaningfully in half, and then the home builders consolidate?
When home builders are pushing forward right now, they're trying to do more multifamily units. The American dream is not living in a multifamily unit. The American dream is owning your own home. And right now, when we're seeing home builders scale up in certain areas, like why? Okay. In New York City, for example, if you want to build affordable housing, one of the little tricks that developers do is that they carve out a certain number of units within the building that are deemed affordable, right? But the reality is that when they take into their consideration, let's say it's a 50-story building and they have to have 10 stories that are affordable at 20% below whatever the market unit rent is at that time, or the way it works in New York, to qualify for certain units, you have to be below the regional AMI, the average median income of the area. So let's say they have to build a certain number of units, 10 of the 100 units have to be affordable housing. So given the labor costs, given the materials costs that go into the building, they price in those 10 affordable units, and then the price of the rest of the building that is built, and when they sell those units, is literally determined X the affordable housing. So instead of every single unit being in the building market rent, you'll have 10 or so of those 100 that are 20% below market rate, and then everything else in the building will be like 10% above market rate. So you're not actually getting market rate housing that's coming into the market now. What you're doing is you're getting a bigger K-shape, where there's more housing being built for the wealthy, and then there's being nominally more housing being built for lower income. But where is the housing for most of the country? In the middle class, and that pushes the middle class out of urban areas, the places with the biggest economic development. So we have a set of incentives, as one might say on the price of truth, that gears people towards building the biggest, most expensive homes, the biggest, most expensive buildings, or quite frankly, not building at all. And it kind of sucks. You know, I really hate and being active in this in New York in my free time. I got to say, it's really dispiriting to see the conversations among some people. I struggle with it. Victor, you and I talk about this off air. I don't know when America became so afraid. Okay, I live in a very blue area. Everyone is very content with their life. Okay, it's a nice area. Schools are good. Crime is low. It's a bubble for all intents and purposes. But when you approach things like we need to build more, we need to solve these problems, I don't know what scared people along the way to stop aspiring to do great things, like build the towers, go into space, helping people through the economy, right? This idea that we can only build housing in this country if it's below market rate. Well, like 97% of Americans live in market rate housing. The idea that we're letting perfect be the enemy of good, we can't add to the housing supply because it's not the exact kind of housing supply that we want, is really, really short-term thinking. And it is maybe it's becoming a singular goal of mine. Like we're going to break the NIMBY spirit. We're going to get more housing built in this country, and everyone should contribute to it. Get more housing built, America. Pump my ITB bag. Before next week, because the call expires next week. So as long as we pump those bags before next Friday, I'm fine. After next Friday, with the housing thing, we could talk about it then. We'll renegotiate.
Good luck with that. Some part of me is waiting on that buildable IPO. I don't know if you know about that thing, those tiny houses, those prefab tiny houses.
Nope.
I think that's the wave, bro. I think that's what's next. I think the days of the 2,000 square foot home or the 1,000, 1,500, let me say 1,500 square foot home, I think they're gone. I think to your point, you're either going to build tiny homes or you're going to build the bigger homes.
That is such a loser mindset. And let me tell you why.
I appreciate that.
We have policies that are going into place around this country because we have accepted the failures of the system as intractable. We can't solve them, right? In New York City, for example, Rikers Island is a terrible place. People being held there without bail.
Did they close that place down?
It's scheduled to be closed down. It hasn't been closed down yet, but like people like Khalif Browder dying in jail because they've been held there for years for stealing a backpack because they couldn't put up bail. And so the solution isn't to fix the court system and unclog the court system so people who are being charged with petty crime are processed quickly and being sent home so they can go back to school. No, the solution is let's just not put people in jail, right? We have these problems in our society that we have fixed and solved before. They're not being solved by deliberate choices, okay? You know I'm center left. I think people here know I'm center left. As someone who's center left, I abhor urban decay. I think that we need to have clean streets. I think that we need to have safe neighborhoods and good schools for our children to go to so that they can one day live their own American dream. And the fact that we have so many policy solutions in place, it's like, yeah, we built this code in MS-DOS. And instead of rewriting the code, let's just, put more on top of that MS-DOS code that was written 40 years ago. At some point, you have to look and say, this isn't working. It's not meeting the moment for the problems that we have in our society. So stop finding solutions that accept failure as part of the outcome. We shouldn't do that. It's sad. It's sad.
I agree. My point was, unless we address the incentives that are currently laid out, the inevitability is to go towards smaller homes or longer maturities on debt, which I think is kind of crazy, like going longer than mortgage. 30. Exactly. I think going longer than 30 year, who knows, maybe it's inevitability, but I think it'd be such a bad outcome for people to get stuck in those situations. Anyways, all right, let's get back onto, let me ask you, VIX 1410, a little bit of another VIX crush today. And I say VIX crush, I know that on an absolute basis, it wasn't a huge move in VIX, 50 cents or so, but on a percentage basis, it was. It made a 5% crush yesterday, 3.5% crush today, and that comes on top of last Friday's nasty crush. So at 1410, man, how does this impact your trading, if at all? I know you're not necessarily the typical tasty trade vol seller, nor am I. Does VIX at 1410 in any way shape your opinion or your trading style?
So prior to the election, my mindset was that we were in a reflation environment, thanks to the Federal Reserve's policy decision to cut 50 basis points in September. And so that's when I got long, deep out of the money calls in the S&P and the NASDAQ. And the fact of the matter is that when we look at studies for how the market has performed in environments like this, when the VIX is below 15, when we have prices trading above their 1 week or 1 month moving average, being long the market, simply long yes or long at the money calls, is way more efficacious than simply selling volatility down here, right? Just stay long. There's no reason to get too fancy about it. In this case, having had long exposure in this market, long dated calls that I put in play back in September that still don't expire for a month plus, seeing several of them that are currently sitting in the money because in the ESH5 contract, they're geared with the long calls at 6,000. And I believe in ESH5, where he last traded at 6107, right, and 3/4. So I'm comfortable holding these for now. I don't see a reason to change that stance, because if you're long calls, when do you just want to be long calls? When do you want to be long the call spreads? Well, when the VIX is below 15 and momentum's positive, that has fit like a glove a number of times this year. Granted, 2 weeks ago when we spoke, it was fitting like a glove and then we had to pull back. But you know what? Hey, we're back to where we were 2 weeks ago. So kind of keep calm and carry on. I have a longer term view here. I'm working very diligently to try to get around biases, including the fact that I hear a lot from people. I read the tweets. People think I'm a permabull. I don't think I'm a permabull. You were with me in 2022. ARC down, oil up. That's not a bullish stance. That's a hard assets over financial asset stance. But in this environment, deficits are up. Monetary easing is here. The economy on the macro level is doing much better than people want to give it credit for, because the micro level still sucks. But that is a mix of conditions that still speak to long stocks. So I'm going to be boring, Vic. I haven't placed a trade since we spoke last Tuesday, because everything is working everything except for gold is working.
Let me ask you this question. I really don't want to. We did so much politics already. I don't want to, but I want to ask anyway. I wouldn't be true to myself if I didn't. You just mentioned the macro is strong while the micro sucks. I think a lot of that's probably due to how money was deployed into the economy from the last presidential administration. That is their thinking, right? That if you give money directly to people, that likely their spending creates an inflationary impulse in the economy. So instead, the government does the spending on behalf of the people, which mutes the inflationary spend, or it mutes the inflationary response in goods and services themselves, but still has an asset inflationary impact. Whereas the new administration may have a very different thinking. My question to you is, in order for the economy to continue to be strong at the macro level and suck at the micro level, do you think that's possible in the next 4 years, or do you think we need to see a flippening happen, where in order to be successful under a Republican administration, especially one with the type of mandate and promises this one has made, you actually need to see strong micro? Like the micro is going to matter much more over the next 4 years than it has.
So, trying to distill the MAGA economic orthodoxy into, simple terms, it seems like it's, higher wages and higher domestic manufacturing jobs, right? Like if we're going to keep it simple, reshore, we sold off jobs abroad. We should have these tariffs in place to encourage domestic manufacturing. So that's what we're going to do. In that case, the micro level, I don't know if the macro level needs to suffer. I think actually in an ideal world, macro and micro are performing equally well, but you'd perhaps see the stock market go down because these companies that derive so much of their corporate earning profile from overseas would be substantially hurt. For many of these companies, the goods that are brought into the country are already invoiced in US dollars, like at a fixed rate. So if the euro goes down to 1 or up to 120, it doesn't matter. We're still paying the, $39.95 for it in US dollar terms. The Kansas City Fed put out a great study a few years ago. 95% of the items that we import into America are based in US dollar terms. So when we have a contract with, what's the banana company?
Dole?
No, not Dole. The other one, Chiquita. Yes, Chiquita. I'm thinking of the lady, Chiquita, right? Okay, like when we have an agreement, like, we're going to be importing Chiquita bananas from XYZ country in South America, will we? Trying to think of the best way to go about this. Let me take a step back here. I think that the most important thing, recenter the conversation, because I'm going too far too fast with this. Let me think about this for a quick second.
All right, let's go instead. Because we only got 10 or 8 minutes.
Okay, sure. Sorry about that. I'm flying 100 directions.
I get it. It was a weird question. Let's do this instead. With the 8 minutes I have left, I want to go boom, boom, boom on a couple of instruments, some of which are stock. Normally I just stick to the macro stuff.
Sure.
But I'm actually curious, because you and I have never talked about MicroStrategy. Whether or not, like, if you have a strong opinion here, people came for me I don't really understand why. People came for me in the comments of a segment I did with Tom. I don't know, maybe they're shitting on the whole thing, but my point of view was, when you have a company that at the time, because I think we top ticked this, was up 750%, why wouldn't you have, because this has happened before, right? MicroStrategy, Saylor comes in, he adds Bitcoin to the corporate treasury, and then he had, a few years ago, he had some Me Too companies, Tesla being one of them, added Bitcoin to the corporate treasury. Because when you see somebody that's having a lot of success and there's nothing specialized that they're doing, you as a corporate CEO and a corporate board can choose to implement that strategy as well if you want to. I said that people are going to see his success, this plus 750%. They're going to look at his corporate or his convertible debt strategy. They're going to go, I could do this. How do I think about Bitcoin? And if they choose to make the jump, it is logical to see some more Me Too companies adding Bitcoin to their corporate treasury and potentially utilizing this convertible debt strategy. It is inherently, my position was actually pro Bitcoin. It was pro Michael Saylor, but I was going about it from a different angle, which is from the competing CEOs that have an idle business with not exciting margins, and how do I make my stock, my company more exciting? I can guarantee you there are numerous of those out there, and those are the ones that would most likely be open to something like this. For whatever reason, that was seen as inherently like, what, you don't know Bitcoin, why are you talking about Bitcoin? It's like, okay, bro. I'm curious, what do you think about MicroStrategy's strategy here? How much have you looked into it, and what do you think about the risk?
Victor, if someone came to me today and said, Chris, I want to buy your house at 2.5 times what it's worth on the Zillow estimate, all cash transaction, it might be financially irresponsible of me to say no, even if I love living here. If there are people out there that want to pay 2.5 times the book value of Master MicroStrategy's holdings, then it would be financially irresponsible of Michael Saylor not to take them up on that offer. People, for some reason, want to punt this, and this is perhaps a problem with regulation in the country. Why can't people overseas get access to certain types of funds, like the Defiance ETF? Why can't they get access to IBIT? So what recourse do they have? Can they invest in a single stock name like MSTR, though? Yes. So this creates some inefficiencies in the market. People are looking for Bitcoin exposure. If you're in a foreign country that throttles or regulates how Bitcoin is trading in your locality, but you have no problem having access to a brokerage that allows you to trade, ADRs of US stock, hey, MSTR, like Riot was or Coinbase was in years past, like this is a way to get that exposure. The problem is that we've seen some unsavory stories begin to pop up in the news that are very reminiscent to where we were like right around the bubble popping in GME in 2021. Like people saying, yeah, I was trying to figure out a way to manage my parents' money, so I put 25% of it into the Defiance ETF and the rest of it into MSTR, and their portfolios doubled from 700,000 to 1.8 million, more than doubled, right? Like those are the kind of stories that you see when the speculative excesses have already been flowing for a long time. And a share price that was at $550 a share a few days ago, now down to $362. This is the boom and bust cycle that you're playing with. So I want to go back to an old adage that you and I have talked about for many, many years now. If you like Bitcoin, buy it and put it into cold storage. That's it.
I don't disagree, but there's a part here, there's the greed aspect, which is MicroStrategy is returning 2x Bitcoin. So then the question becomes, if you like Bitcoin, well, you're going to love 2x Bitcoin. And it's going to continue that way on. And there's some part of this which is like, what debt investor, let me say this differently. It is logical that debt investors would look at this and say, you mean to tell me I've got pure Bitcoin equity upside and only in a debt instrument to the downside with a little bit of yield on it? Like, it's sort of clear to me why there's a bit of demand there. And if there's demand there, why that adds to excitement in the equity side, and then the dilution of the convertible debt puts downside. Like, it's a wild strategy that they've got on right now.
Is it a two for one though? Like Master, I can see MSTR thinking Master. MicroStrategy is down 35% from its peak a few days ago, right? Bitcoin's
but
only down.
The vols are different. The vols are different.
Sure.
So the vol in MicroStrategy is like 180%, and the vol in Bitcoin is like 60. So the point is, if you're going to get 2x on the upside, you're going to get the 2x on the downside. I agree. You're not getting
that though. You're getting way worse than that, is my point, right? You're getting closer to 4x. Yeah. Right. Yeah. That's kind of the issue here. When people are going into MicroStrategy, they're doing so because they're trying to get leverage access to Bitcoin that's levered. And I think right now, you can kind of see it on the charts here. Like, it feels like the leverage ratio has increased, where if you were doing MSTR back in, can I say September? Like in September, yes, you were getting 2 times the Bitcoin,
yes,
right?
Yeah.
And then you go into November, it's like, okay, this kind of feels like a 3 times vehicle. And in the past week and a half, it's been a 4 times vehicle. And so, I mean, unfortunately, this is going to hurt some people along the way. I personally,
agree.
I haven't traded MicroStrategy. I don't trade MicroStrategy. I don't think I've ever placed a trade in MicroStrategy. And there are going to be some people saying, well, you idiot, you missed generational wealth for your kids. I've seen the memes, right? That's going to be the hardest part about talking to my daughter in 20 years. Daddy, what did you do during the Bitcoin craze? It's like, I was reinvesting dividends. I was in the dividend aristocrats ETF, honey.
I was investing in the Dow Jones, honey, in blue chips.
Victor and I were convincing each other to buy uranium ETFs.
No, that'll
How
still
did that
be
work
there.
out?
That'll still be there. All right, let me ask the question this way: in 10 years from now, because like if I were to go back to you in 1999, 2000, and you tell them the story of MicroStrategy, it would have been one of excitement. Fast forward past the dot-com bubble, and it's a story of a bust and a CEO that got overly excited, overly exuberant, and and played games with their accounting and lost that game. If I fast forward 10 years from now, what story do you think you're going to be telling about MicroStrategy?
From a pure entertainment perspective, I miss John McAfee.
Okay, where are you going with this?
Michael Saylor is going to be the wealthiest person on the planet, or he's going to be John McAfee. And it is a total binary outcome, right? He's going to be on the run, faking his death, escaping from Ecuadorian prisons, jousting with Bukele.
This is how I know.
He's going to be living on the moon. Okay.
This is how I know you're going to be a great politician. I asked you a very difficult, almost unanswerable question, and that was an incredible way to work yourself out of the box I put you in. Chris Vecchio, if people want more from you, tell them where they can go.
Not here this week. I'm off the rest of this week. So. I'll be back next week, though, Monday to Friday here on Tasty Live on Futures Power Hour, 1 p.m. Eastern, 12 Central. Of course, here on Victor Jones, The Price of Truth, Tuesdays, 6 p.m. Eastern. I'm also with Tom and Tony on Tuesday mornings. Let me explain, 9:40 a.m. Eastern, and, of course, overtime, Monday through Thursday, 4 p.m., right after last call. You can find me excreting on Xitter at CVecchioFX.
Last question for you. Are you on Blue Sky? And by the way, our friendship depends on your answer here. It's writing on it.
As the son of attorney, I reserve the right to an extended answer. So I have been on Blue Sky for a number of months just to sign up. Okay. I have not sent out a single thing on there. Oh my gosh. What an insufferable place.
Really? I reserved my name just so nobody would get on there and do Victor Jones, the Owen Jones, the 0, because I like to be difficult. Take that and then just spam people. So I did that, I think, a week ago, because I was like, oh, shit, I'm talking about this so much. It's logical some spammer out there is going to go do this, so let me reserve it. But I haven't looked around at all. It's insufferable in your point of view?
Yeah, it's a big echo chamber, right? And this is one of the things that I love about the First Amendment, honestly. The whole reason why you have civil discourse in a society is because when you don't have civil discourse where people can freely exchange information, you typically resort to violence. Like, that's just human nature. That's human history. When we can't resolve problems through civil discourse, people that want to get their way resort to other means. And this radical revolutionary idea that a group of people could choose self-governance and have no one tell them what to say, what to think, or what to feel, that's a uniquely American experience. People from all around the world fling themselves across oceans, land masses, maybe one day through space to come to America, right? People fleeing Mars to come back to Earth, come back to America. But the point is, people take that risk, and that profile of a person, those are unique people that have then led to generations in this country. We are a nation of risk takers. You're here because somewhere along the line, someone in your family probably took some risk. Okay. And from that point of view, this idea that we're going to shut ourselves into like various little subreddits where all we hear are from people who think and talk exactly the way that we do. Variety is the spice of life, folks. If you have a good argument, you're going to win it on the merits. And if you can't win an argument on the merits, then it's probably not a good argument. And so I really, truly, firmly believe the people that are leaving Twitter or any social media network because they're coming into conflict with things that make them uncomfortable, I think that's a sign of weak character, honestly, at the end of the day. We need to have faith in people that they have the critical thinking skills, that you have your own critical thinking skills to sort through the wheat from the chaff. This like kind of goes to the whole book banning thing that I'm seeing nationwide, including here in my own town, where people are putting notes in books about the Holocaust, about how it was fake. The very notion that we don't trust people, young or old, to read information that makes them uncomfortable and to think about it and to reflect on it and to either double down on their convictions or to learn a new way to view the world, that's not protecting our children. That's not protecting our way of life. If anything, it's weakening it. America is dynamic. America's dynamism comes to the fact that no one tells any of us what to think or what to feel. We're here because we wanted to be here, because we like taking risks. That's why America is so much more dynamic than Europe. Europe's economy hasn't grown in a decade. The United States economy is at $10 trillion in GDP. These people that are fleeing to blue sky, you're going to get me all sappy and worked up and waxing poetic about the country that I love. But you're part of the problem. Like anyone who is socially isolating, saying I can only be surrounded by people who tell me what to think and what to feel and agree with what I think and what to feel, you're not actually conversing with people. You're just looking for confirmation bias and reassurance. And that's, I don't know, not for me.
Amen, brother. A great message to go out on prior to Thanksgiving when everybody goes home and hopefully does not have a giant wrestling match over a turkey because of who they did or did not vote for a few months earlier. Chris, I'm telling you, man, it's always a pleasure. Sometimes we get politics from you, sometimes we get price, and sometimes we get philosophy. I think no matter which one we get, we're all better for it. Thank you very much for joining the Price of Truth, my friend.
Happy Thanksgiving.
Happy Thanksgiving to you and yours, my friend. To all you savages out there in the chat, I didn't get a chance to say what's up, Anonymous saying Vecchio 2028. Here, my friend. What a great message to go out on. To all you psychos, I'm just kidding. To all you in the chat, what's up? I didn't get a chance to say what's up to you earlier. Donna, Brian, Cactus Leo, Lone. I think I saw Catan in here, VW, Scramble Everything, Anonymous. I can't say what's up to everybody. Edward, I see you. What's up? I'm going to do a couple of instruments before we get out of here. Of course, I got to talk about bonds before we leave. 118 and change. We floated a little bit lower here today. Not enough to spook out the new longs. I don't think. It certainly didn't spook me out of the position. But we had said yesterday we are trading top end of the range. So the question here is whether we fade this range, right, at this 118 half level, or whether we can find enough momentum to break out. Consolidation at the top end of the range shouldn't scare anybody. It also shouldn't scare anybody if we start to move back towards the bottom end of this range in bonds. It just depends on what position you have on, what leverage you have on, what risk you're willing to take. But I think I'm pretty comfortable with the risk that I have in here in this bond range. I want to play the upside breakout, very small and very risk defined. I'm staying there. This wasn't enough to spook me. The half a point move down to the downside. I don't think this changes much. But tomorrow we are going to have, mortgage applications, GDP, durable goods. It's a big day. Durable goods, claims, of course. We're going to get that a little bit earlier, given the fact that we've got a holiday on Thursday. Pending home sales, personal income and outlays, which basically has both income figures and PCE, the Fed's preferred inflation gauge, and the seven-year note auction. Just saying, it's not like that's a huge one. We had the 5-year today and the 2-year earlier on Monday. The point is, tomorrow's a pretty big economic data day. GDP, that's a first revision. It's a first look, not a second revision, not a third revision. So it is the third quarter GDP, the consensus is going to be 2.8%. Prior was 2.8%. So this is above average trend growth. People will take issue with how we're getting that high level of growth. I think Chris pointed to this a little bit earlier, where a high level macro is strong, but perhaps the individual micro stories are not strong. How do you get there? You get there by putting a lot of fiscal spending into the economy, which isn't necessarily going to the consumer to then make individual purchases at, let's say, Abercrombie and Fitch, or something like this. I don't know why I brought that up off the top of my head. But instead is really going to more bigger, broader industrial efforts, more G2B type spending than C to B, consumer to business. But the point is, we're at above average trend growth. Anything there, any unexpected sort of weakness in growth could spark your bond rally a little bit. I'm not saying it will happen. I'm just saying a little bit of there's, with enough of these economic releases on Wednesday, you could have one of two outcomes, right? You could have something in there that sparks a catalyst in a bond move, or you could just have a bunch of economic releases that tell opposing stories, and there's not enough to really draw a clear narrative out of Wednesday. But the fact remains that there's risk. The GDP now, just to be very clear, Atlanta Fed puts out a GDP now. Their latest estimate is at 2.6%, and that is in the fourth quarter. So they're modeling out, quarter ahead here. But it is 2.6%, which means an ever so slight decrease in economic growth. But still, these numbers, 2.8% is far above trend. Trend's basically 2%. If you want to draw that line in the sand, is 2%. So 2.8 versus 2.6, your outcome is still above trend growth. Though I do think on the delta of 2.8 to 2.6, or any downshift in growth expectations I think it would be enough for a little bit of a bond rally in the short run. We had, I should say, the only real earnings event that I was interested in for this week. I'll bring it up for you guys on the screen. Don't worry, we'll get it up here. Which was CrowdStrike closed at 364. I believe the implied move was around $40. At least it was when I talked about this on Sunday. It might have come in just a little bit because we have, it might have come in just a little bit. But it was 364. We are now down $20 in extended hours trading. So if you're an equity investor, that's a little painful. But if you were trading the range here, $40 looks to be, I don't want to jinx it here, but it looks to be in the short run good money. Let's see if we can really quickly get you the earnings response, what this was. I made the joke on Sunday. Some part of me knows I'm not serious with this, but there is a small part of me that is dead serious with this comment. Is there anyone that hasn't been hacked at this point? And did it matter which company that they were utilizing as their cybersecurity program? It doesn't seem to matter. So if everybody's getting hacked, if everybody's data is available, as long as the right person wants to come and get it, can somebody explain to me why these things trade at such rich valuations? Some part of me can't wrap my mind around that. Where is the value coming from when everybody's getting hacked? And it's not just like you and me and like the grandmas or grandfathers, or let me just say elderly generation. who aren't digital natives. That's the only reason I'm calling out. I'm not being ageist. But it's not just those people giving away their passwords freely on some email exchange. I mean, this is like the president-elect and his cabinet members. This is like major Fortune 500 companies. It doesn't seem to matter what type of protocols people have or what type of security they have, what type of policies and procedures are in place to protect that data. It doesn't seem to matter. It seems like if somebody wants it, they're going to come get it. I'm trying to find something good on their earnings. And we'll do this. We'll do gold, silver, and a few others before we get out of here. Am I crazy? Is that sort of anyone? Is anyone in the field? Can anyone tell me? I'm saying this tongue in cheek. I know mostly it's irresponsible and probably a bit naive, but there is a part of me that goes, these things trade crazy rich. And everybody gets hacked. So then why? CrowdStrike, quarterly earnings, 93 cents per share. It was above 81 cents per share consensus, at least according to this source, compared to 82 cents a year ago. I'm guessing that a light guidance because that's a pretty big beat. Earnings surprise of nearly 15%. This article's terrible. See, this is the problem. You know, the liquidity of information on some of these underlyings just sucks. I can tell you from the headlines that they did have a light guide, but I'm trying to see what it actually was. I'll try to pick it up here. I appreciate it. Appreciate your patience. Here it is. Adjusted earnings will be 84 cents to 86 cents per share in the fiscal fourth quarter. CrowdStrike said Tuesday in a statement. Analysts were expecting 87 cents according to Bloomberg compiled estimates. So there you go. Light guide. So generally, you'll take a little bit of pain, but that's not enough to likely move outside the expected move, knock on wood. So a lot of you guys that sold that range probably going to be okay. Good money. Nice trade. Book it, Dano. So I'll go on. Not much happening in the yen space. I told you guys I don't have much dollar exposure on. I'm long the yen. I'm still long Bitcoin here. I told you I added to that position right around 94 yesterday. So the first lot is on around 61. The second lot is on around 94. And the idea is just to trade this thing through 100. You know, I think anything below 88, I've got to rethink my. I think I got to rethink my short-term optimism. Global liquidity has rolled over here. I know a lot of people in the Bitcoin space have talked about that. I think Chris, even 2 weeks ago, talked about the global liquidity rolling over, and that Bitcoin tends to lag that global liquidity by a few weeks to months. And I had also posted the who's selling. It seemed like there were some rather large Bitcoin whales unloading some of their positions as we neared around 100,000. The question is whether institutional or corporate demand, or corporate demand can sort of offset that here at these higher levels, or do we need to see a bit of a more flushing out in order to bring in more institutional and corporate demand? I'm betting that consolidation or short-term sell-off on its way to higher prices. I could totally be wrong, but that's still my position here. Why? I just want you to know, I skip crude oil and natty gas mostly because natty gas I'm terrified of when it gets moving like this, and gold I don't have a direct position in. I am long energy stocks still. I haven't reduced those positions in any way, shape, or form. I've reduced my China positions. I told you that before, but I just want to say it explicitly. Anyone that knows my style knows I tend to accumulate equities when nobody wants a thing. And if I get lucky, the equity goes higher, and I'll look to collar those positions. And effectively, I'll turn it into a synthetic vertical spread. So I sell some of my upside calls. I take that premium. I go buy downside puts so that I've minimized my downside risk and capture some of the profit in an upside move. I had that on in these Chinese stocks. And I told you guys, I think it was November, might have been, it was November expiration, I believe, that I was going to have a decision to make whether to let, because a lot of the equities had gone below my long put. So I'd captured the profit, and the question was, do I want to monetize the hedge and keep the long stock, or allow the put to basically expire, and because it was a penny or more in the money, it would exercise, which meant a lot of those positions would end up selling some of the equity. And I let them exercise. So I still have Chinese exposure, but it's probably like 30% of what it was. So a lot of the chips on China have been taken off the table, at least for now. So I guess the next question is, when do I look to reload? Because I think that the answer to that is it's when, not if. But at what price are you getting value to re-enter is my personal question. So that's why I haven't been talking specifically about crude or natural gas on a daily basis. I just don't have a vested position. So why would I opine on these instruments if I don't actually have my money invested in these ideas? I wouldn't. Not sure what's happening with my internet connection here. I'm not sure why I'm not getting the data, but gold, I still am flat, but waiting patiently for something closer, for a violation of 2,500 would be perfect. I don't know if I'm going to get that chance. Silver, I've got long deltas here, and I'm staying long deltas. The hope is that we make a move up towards those previous highs around 37 or so. If we do that with speed, I've got a long gamma position, so that'll help me out. Those are the individual positions. I find it interesting, the winners versus losers today. I'll talk quickly about these. So the utilities, we had brought up the fact that some analyst, I can't remember who, had downgraded this space a few days ago. And while on one end it's price action over a short-term period of time, a lot of these utilities, because they're so underinvested, you start to get capital running to them, they're going to move very quickly. So on one end, I could sort of see on a short-term price basis, some of these things are extended, but on a longer-term basis, they're so underowned. There's like 2.5% of the S&P's exposure is allocated towards utilities, and I just don't understand downgrading a sector. If you believe there's going to be economic, so normally utilities are just a defensive play. So you want to get there when you think you might have a typical risk-off scenario in the markets, and it's mostly thought of that way because of the high debt loads that these utility companies carry. And because they have high debt loads, when debt gets less expensive, so bonds rally, it helps utilities. And that sort of inverse correlation helps, in part, people to think about utilities as sort of this defensive sector, because in a risk-off scenario, you might sell out equity, you buy bonds, and because you're buying bonds, interest rates are going down, that's helping utilities. But also utilities just have a lower beta. So if you're a money manager, and you can't really just go cash, because then you got to explain to somebody why they're paying you 2% of their money so you can just hold it in cash when they could put it in a bank, hold it cash, and be paid money. You got to explain to somebody why you're holding their money in cash. You can't do that if you think the market is going to go through a rough period of time. So you go into lower beta instruments where you still have exposure to the marketplace, but on downside moves, it has less impact to capital. So you have sort of a capital preservation strategy. So that's the way the market has typically or historically looked at utilities. But in a world of just massive energy demand that's not coming directly from oil, there is a demand for energy outside, above and beyond what oil can provide. And in that world, utility is playing a completely different, it's playing a different ball game now. So that old sort of narrative about how to think about these boring utility companies as just a defensive play instead of also a pro-growth, pro-cyclical play, I think that's the mistake. So downgrading utilities when they're 2.5% owned, to me, is insane. Anyways, it's up 1.5%. I'm not saying it can't go down from a trading perspective. I just think on an investment perspective, which is what analysts and these upgrades, downgrades I thought were supposed to be about, I think you're still early, in my personal opinion, as long as beta continues to perform to the upside. If the market in general doesn't perform to the upside, and you've got a correlation to one market, I don't know what that means for utilities, honestly. Because if I'm saying the stories change, I don't know what that means in the defensive market, honestly. But then healthcare as well is number two. I've got to be honest, I sort of missed this whole health med tech move. Give me just a second. Sorry, I'm trying to clean this up for you guys so I can show you something. I missed this med tech move. The only exposure I really had to it was Intuitive Surgical, which was just such a clean performer. I don't want a 5-minute chart. Let me show you 1 year. Only got a few more minutes left. So Intuitive Surgical was like one of the best performers that I happened to own. Got lucky on buying it at like 190-ish or something like that. I think Dr. Data asked me once. He's putting out one of those newsletters, so it's in some tasty newsletter, and I had some snarky comment about why you should get long Intuitive Surgical. I think it had something to do with like global elites, something like this, a few years ago. You could tell what type of time I was on back then. But Intuitive Surgical has just been this monster to the upside. It's something nobody talks about. Its variance has been super low. But, healthcare checked all these boxes. Pro-growth. It's also a defensive play. This in particular is a robotics and automation play. So this thing checked so many boxes, and every time you even saw weakness in the overall market, you didn't really see that here in this underlying name. I happen to get lucky and own this one, but like there was so many of these stories in medical technology that have played themselves out, and I wanted to throw this in front of you really quickly. Luke Gromen is an incredible market mind. One of the things that he said is at Luke Gromen, LukeGromen. I think he's an incredible follow. He was speaking to gold, Bitcoin, and just what's happening with the dollar. He's very much been on the side of fiscal irresponsibility leading to a divestiture in U.S. Treasuries, which leads to higher interest rates, which also leads to increase in gold price as central banks look to diversify away from or divest out of U.S. Treasuries, not just because of some short-term factors, but just playing it out over a longer term. And one of the things he said, which kind of blew my mind, because somebody was debating whether or not this graph that he used, gold price in Weimar marks, whether or not the analogy was a good one or not. They said Weimar owned debts in foreign currency. The U.S. government has no such debts, merely the liability to return saved dollars to the private sector. And he says the U.S. owes $50 to $100 trillion of hips, knees, prescriptions, and doctor's time to boomers. Fed can't print those. They are functionally indistinguishable from a foreign currency. And so, in my mind, I've been so preoccupied with thinking about Social Security because I've been viewing the world through this bond lens, that I've been thinking about, Social Security, Medicare, Medicaid through the bond lens, that I didn't really think about it through the investor lens, through the healthcare lens. And what happens as boomers start to hit this retirement age and start to hit this peak year of sort of healthcare services in need, or in need of these healthcare services. And to have a number thrown on that, I haven't validated that, but that number is massive. $50 to $100 trillion of hips, knees, prescription, and doctor's time to boomers. Insane. And so I sort of, in retrospect, understand this massive medtech move. It doesn't really help to explain this in retrospect. I apologize. I'm sure a lot of you are much smarter than me, have been on this theme. At some level, I understood it, but just didn't quantify the market size. And the market size, $50 to $100 trillion of medical services to our boomer generation, it's just massive. I'll leave you with that. It is 6:30. I'll continue that thought another time. We've got Ilya coming back on for our next conversation. I'm excited about that. Hopefully we'll pick up where we left off. I think people got excited about last week's conversation. If you didn't see it, feel free to go back and watch it as a starter. I think the last 20 or 30 minutes is when we start to have a discussion about the dollar, purchasing power, Bitcoin, and the differing views that he has versus my view. So I'm looking forward to rekindling that conversation. I appreciate all of you who went to my Twitter feed yesterday and participated in that poll. It will be used in internal conversations, so your voice will be heard one way or another, and I appreciate that. Everybody, if you could, do me a favor. Easiest way to support the people on this side of the screen is hit the like button. Costs you nothing. Takes you 2 seconds. Leave a comment. Takes a little bit more time, but I appreciate the engagement that you show on these videos. I made it a real effort to make sure that the chat was part of these shows, that your thoughts are part of these shows. That's why you're seeing your running chats on every single show that we have. And I made it a real effort to make sure that the comment section is open for all of our discussions, because at the end of the day, I think this is more than just like a one-to-many type of environment. To me, I look at this as a community that we are building together with content and substance that we find are relevant. Sometimes they're politically relevant, sometimes they're philosophically relevant, and sometimes they're relevant to price. But I don't think we're scared to go into any of those three places, as Chris demonstrated earlier. For that reason, I think your input is important. So I'm asking you, if you have a comment, leaving a comment helps to validate that strategy of making sure that your voice can be heard. My daughter is in the background going crazy. So I will say this. I'll see you back here, same time, same place, same great network, only on Tasty Live. Peace.